The market continued lower in today's trading, bouncing mid-morning off of the 590 level all the way back up to the 595 strike. We mentioned this area in yesterday's video between 590 and 600 on the SPY. This is an important support zone, especially if we look back on the chart going back to the beginning of the year. We can see how many times this has been a support back at the beginning of February as well as at the end of January. Earlier in January and December, this was actually a resistance level. So everything between the 600 and 590 has been an area of congestion, both support and resistance at various periods over the last several months. So we closed today right at the middle of that, near the 595 level. This is the largest gamma exposure concentration at the close. Most of this is 0 DTE, which will be rolling off today. The volume in the options market was concentrated between 590 and 600 as well. Quite a bit traded at the 600 strike, even though we were really nowhere near that at all today. Nearly 500,000 contracts on the SPY alone traded at that strike today. So very important level. I think this bounce has the potential to continue on to the 600 level in the next day or two. In terms of total gamma, we are firmly in negative gamma exposure territory, negative 2 billion. We're also at the extreme range of our GEX weighted volatility gauge. This is basically telling us that we're near the highest implied volatility that we've been at in the last 52 weeks. As we mentioned yesterday, this is a recipe for a potential bounce, even if it's just a temporary bounce, having extremely high relative implied volatility and extremely negative gamma exposure, especially when we see this on the SPY, on the S&P 500, on the Qs. This oftentimes leads to a situation where we have a potential bounce. So today could have been the start of that bounce. This oftentimes will take a couple of days to play out, but we're looking for the potential for a bounce in the coming days.
Yeah, good observations on SPY, Anthony. I wanted to briefly touch on DIA, which seems to have turned a little bit sooner than the other indices, actually closing the day positive and bouncing almost perfectly off of this lower Keltner channel that we see here. It's still too early to say if we might overshoot this lower boundary or not. I wanted to briefly mention the VIX as well. Last week, we mentioned the 20 strike as the area where the upper dealer cluster zone was located for the VIX. And we finally reached that yesterday. And then today, the VIX again spiked, this time almost reaching that upper Keltner channel, which is at 21.83. We got really close to that at 21.5. So once again, the VIX rarely follows levels exactly, especially when there's an emotional spike occurring. So this very easily could overshoot this to the upside. But I do think that we are close to some sort of bounce given some of the extremes that we're seeing. So these are things that we'll keep watching.
Thanks, Sean. I just wanted to go back to the SPY real quick. Even though we're discussing looking for a potential bounce out of this area, I did want to mention that we do have hedges in place. We put hedges on at the middle of last week. We actually rolled some previous hedges. Basically, we're always maintaining some sort of hedge in our portfolio. Last week, we put on the 600-585 put debit spread on the SPY. So that is giving us coverage on the downside in this zone. So this 600-585 put debit spread is currently in the money. And basically what that does is it gives us room to put on new long positions. And if we're wrong on those new positions that we're putting on and a bounce does not materialize and we continue to see a sell-off down to these lower levels, let's say the 580 or 570, we'll continue making money on our existing put debit spread, which will offset the losses and even potentially give us gains in our portfolio overall. So I love these setups here where we come into big support zones. We've already got our hedge in place, which is making money, and then we can initiate new long positions, which is a great risk reward strategy by basically taking low risk on upside calls that have huge outsized return potential if the bounce does materialize. And again, we're not looking for a move necessarily tomorrow. We're playing, for example, the March 21st expiration in the options market. So primarily we're looking at an options portfolio constructed with diversification, hedges, in an asymmetric risk reward approach. So make sure you keep that in mind when you hear us talking about adding potential long plays and looking to the upside. We do still have our downside covered from our hedges.
Thanks, Anthony. I'm focused on a lot of these tickers where there appears to be a potential oversold bounce opportunity, of course, within context of the way that we structure our portfolios with hedges in place. I came across Chipotle, and of course, I do eat their burritos on occasion, but one thing I noticed about the decline that's occurred really for Chipotle, it's been since December, had a big drop and then a period of consolidation here. And we're finally down to this area. We're kind of at this area where we continued this breakout that started in November of 2023. So this appears to be a pretty important area. It was support in the summer of last year and a rebound spot, and here we are again. And what's interesting, today we closed back above the whole moving average. This was the first day to close above the whole since early February. And for me, the whole moving average is an indicator that is a line in the sand for bullish versus bearish, but I like that we closed above it. Looking at the gamma picture, Chipotle represents essentially an oversold bounce opportunity, but we're rebounding from that next lower cluster at 52. And today's rebound got us almost to the 53 mark. So pretty nice start. I mentioned this trade in Discord, so we had some decent initial follow through as well.
Thanks, Sean. Next, let's take a look at Tesla. Tesla down another huge chunk today, over 8%, closing just below 303. Tesla's down over 30% since the beginning of the year, so basically in 7 weeks. Really huge move. I think this is going to be a big level at the 300 strike. Big volume coming in today in the options market, big gamma exposure at the 300 strike. This is our lower dealer cluster zone, and we have a really wide range here in terms of the options data between 300 on the downside and 360 on the upside. 360 was also a resistance level at the recent peak back in the middle of February. So in terms of the big volume that came in today at the 300 strike, and we can see volume coming in all the way up to the 350 strike, I think it'd be interesting to play for a move back up into this 350 level, maybe into the March 21st expiration. This would be a speculative play for your portfolio, but it's something that we're going to be looking at in our community Discord, which, by the way, you can check out for free, link in the description below. But I think scooping up some relatively cheap calls, maybe some call debit spreads to the upside out of the money, potentially, let's say the 330 to 350 range, somewhere in here for the March 21st expiration, I think sounds really interesting from a speculative play. So that's something we'll be looking at here in the coming week.
All right, my last one for the day is Home Depot. That's HD, and very similar set of characteristics to Chipotle that we just covered. We had this decline that started in Home Depot's case. It was in January, took us down to where we dropped below the lower Keltner channel on the daily chart yesterday. We breached the whole moving average and then faded back down. And I was actually kind of glad to see the fade, because I didn't want to enter at the top of this huge green candle. The positive thing in my view is that we closed above the whole moving average, which is this purple line at 391.09. As long as we hold above that, my bias is to the upside. We did see a pretty nice swing back to positive GEX territory, and there was even a little bit of a preview with yesterday's change, which it was still in negative territory. So gamma has improved. We're back in positive territory. As you see, this fairly large GEX cluster at 420 is clustered around the March 21 expiration. So give a little bit of time for these larger GEX clusters to reach the target date where we see most of it concentrated.
Next, let's take a look at Walmart. Walmart had a big day today, up over 4%. Like Sean mentioned earlier, the Dow stocks have really been doing well. Dow actually positive today. And so a lot of this is because of the move in Walmart, bouncing off of the 92 level a couple of trading sessions ago, now closing near 98. We've got the largest gamma exposure concentration at the 100 strike. More volume continues coming in at the 100 strike, over 40,000 contracts in the options market traded today. We're also seeing volume coming in at the 105 strike. This is outlier volume, but near the recent highs. And we've got some pretty decent gamma exposure at the 105 strike as well. So I like the idea of adding a potential long strategy in Walmart in our options portfolio on any pullback. If we can get a pullback maybe into the 97 or 96 range, somewhere in here, that would be ideal for a potential move up into this 100 strike, or even closing this gap That may take a few weeks to do, but potentially into March would be nice if we could get a great entry here on any pullback. So that's going to be something that we're watching for. It seems like the Dow stocks have really been doing well during this market sell-off over the last couple of trading sessions. So that's something we'll be looking at to add to our portfolio. And you can get access to our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies, which we are rolling out this week. Our strategies include full backtest results, which you can then incorporate into your own trading strategy. Head on over to geeksoffinance.com. You can sign up and become a member and get access to all of that. We are currently running a special $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining and we're ending this promo in the next couple of days, so take advantage while you can. Members also get access to our community Discord. We've got a ton of great traders in there sharing their own trading strategies and market setups. You don't want to miss that. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.